context of East Asia, we're talking about China within the context of Africa. If you've been reading news about Africa or about China over the past 6 or 7 years, you will have noticed a large upswing in stories, particularly in the Western media, about Chinese aid in Africa, Chinese investment in Africa, many of them very alarmist. And so, to start our presentation, before we start talking about how we think it's not actually aid, how we think it's business, I'm just going to put it into the context of Chinese aid in Africa. So, Chinese aid is very difficult to quantify because there's not a lot of open information about it. However, most academics estimate that Chinese development aid to Africa was about US $1 billion in 2008 and about $1.5 billion in 2009. This is out of a total of about $3.1 billion total official aid. So about half of China's aid was going to Africa. Most of this is concessional loans, external assistance expenditures, debt relief, particularly $3 billion in debt relief of canceling of loans from China to Africa between 2001 and 2008. And China said that it was going to double its aid to Africa between 2006 and 2009, which they more than did, with it rising from $625 million to almost $1.5 billion US dollars per year. So I'd like to put this, though, in the context of other aid donors to Africa. As these are all numbers from 2008, so you can see here that the U.S. is the #1 aid donor to Africa in general, about $7.2 billion, followed by the European Commission with about $6 billion, World Bank about $4 billion, France about $3.5 billion, Germany, Japan, and then China here in 2008 with about $1 billion US dollars. When we're talking about Chinese aid, it's important to note that there is no Chinese aid agency. They don't have DFID like in the UK or USAID like in the US. Where this aid is coming from is from the Ministry of Finance, primarily external assistance expenditures, the China Exim Bank, or the China Import-Export Bank, commonly called Exim Bank. That's concessional loans in some part. And then we have the China Development Bank, which does a lot with debt relief and cancellation of loans. So these are all through financial institutions, not through an aid agency. When we're talking about aid and business here, it's important to describe exactly what we mean by those terms. So when we talk about business, when we say that China is in Africa for business, what we're saying is that it's profit motivated and it's capital investments. And we take our definition of aid from the OECD here, meaning that aid should be promoting economic development and welfare, both of those terms. And that it's normally provided through grants or subsidized loans. And then here, when we're talking about subsidized or concessional loans, what we mean is a loan by a government at an interest rate below the market rate. In China, this only goes through the China Exim Bank. It does not go through the China Development Bank. It does not go through the Ministry of Commerce. It only goes through the Exim Bank. And it's normally at a 2 to 3% fixed interest rate with a long repayment of about 20 years and a grace period of about 5 years before that. So what we are arguing here is that aid to Africa, specifically Kenya, which is the country that we study, is not aid. It's investment. It's foreign direct investment going through financial institutions. So before we start talking about Kenya, this is Kenya. We were talking to some people the other day and we realized that we should probably have a slide just showing where it is. Kenya is here in East Africa. It's the biggest port, it has the biggest port on East Africa, so if you want to get anything from China to West Africa and you don't want to go all the way around, you want to go through Kenya. It's right next to South Sudan. It's right next to Ethiopia. It's right next to Uganda. It's right next to Tanzania, Somalia. So it has some interesting neighbors, and its neighbors have some interesting resources. So when we're talking about Chinese aid in Kenya, we were interested in Kenya in particular because when you hear a lot of the alarmist headlines about Chinese aid to Africa, it tends to be focused on resource-driven aid. This idea of giving loans and receiving those loans back in natural resources, typically oil or minerals. And it's actually termed commonly the Angola model because of the relationship between China and Angola. Kenya doesn't have any resources. So it's really interesting that they are a major recipient of Chinese aid and Chinese investment because they don't have any oil, they don't have any major mineral deposits. So we wanted to go to Kenya and figure out what was going on there. When we're looking at Chinese aid to Kenya, it's large in terms of Chinese aid, but in terms of the aid that Kenya receives overall, it's a small fraction. About 10% in 2005, which unfortunately is the most recent numbers we can get. Most of Chinese aid goes for infrastructure. The majority of Chinese aid goes to infrastructure. And Chinese aid for infrastructure accounted for about 20% of total aid in this area to Kenya, from the US, from the European Commission, from the World Bank. The second most largest amount of Chinese aid goes for what's termed general economic services, which is not really clearly defined. Most of that in 2005 went to hydroelectric power, the vast majority of that. The rest went to something that was termed social administration, which again was not clearly defined. 70% of the general economic service aid money that Kenya received came from China, and most of it went towards hydroelectric power. There aren't any Chinese NGOs operating in Kenya that we were able to find. There's the Confucius Institute, that's the education exchange between universities. There aren't Chinese NGOs. And like we said before, there's no Chinese aid department, so to speak. There's only the Ministry of Commerce, the Exim Bank, the Development Bank. All of the aid to Kenya is being channeled through these three mechanisms. So we went to Kenya this summer. We went to Nairobi. We talked to some professors at the LSE. They were very helpful, and we got on a plane. And we conducted an exploratory study over a period of about 2 months. And we were looking to do semi-structured interviews with Chinese enterprises that are operating in Kenya. So we interviewed about 42 companies. We were very pleased with that, very successful. We were concerned a bit about bias because our primary source of information was from these interviews, and we only conducted one interview with one person at each company. And if you've ever tried to interview Chinese companies, you'll know that they're not always eager to interview with Americans. But we managed to interview 42 of them, and we were concerned about bias. So whenever we had the chance, we came up with corroborating documents from the company themselves. Some of them were actually very open and gave us their financial statements, their financial documents. We had more documents also from the web, from the news, from the Kenyan government, from the Chinese government. The Chinese embassy was actually very helpful. And from other companies telling us about their competitors and about other people that they saw working in their field. We used primarily a snowball approach to gather this information, where we would interview one company and to ask, who are your main competitors? Can you put us in contact with them, or do you know anybody else who is running a Chinese firm here in Kenya? And so we got a lot of people's endorsements through that. This was essential. There was no other way that people were going to talk to us if we just walked into their offices. Although we did do that, and a surprising number did talk to us. We got in taxis and drove around the city and stopped at places with Chinese signs. We went to the Chinese embassy and got a list, which was fairly helpful, semi-helpful, out of date. The problem is most of these companies, it's Kenya. Their phone numbers change all the time. The phone numbers change week to week, so we can't say 1 week, you can't talk to them next week. There's no web presence for most of these companies, so it was really difficult to get this information, and this information had not been gotten before. The Chinese embassy themselves had no idea who was operating in Kenya. We talked to mainly people in the construction, the manufacturing, assembly, telecommunications, real estate, logistics, and tourism, fairly broad. Most of them were in construction, manufacturing, and assembly. We didn't talk to restaurants. We didn't talk to small family-run shops. We wanted to go for the major players, the major companies that we could find. The small shops, they opened, they closed, they moved. Information that we gathered would not be relevant a few weeks later. In the end, we identified over 160 different Chinese companies that are operating in Kenya, from Mombasa to Kisumu, mainly in Nairobi. And we interviewed 42 of what we believe were the biggest players. Mollie's going to tell you about what we found.
All right, so on to our findings. What did we find? So the first thing we found was that, just doing a general overlay, most of the companies were private companies, so it was almost an even split between private companies and state-owned companies. The Chinese government defines a state-owned company as a company that is 100% owned by the Chinese government or a government entity. We sort of fudged that and made it more like if it had about a third, we included it in the state-owned instead of the private, because we felt that if a lot of these companies that were getting the concessional loans were only partially state-owned. And so we included state-owned companies as if they had a third percent. So some of the companies that are included in state-owned are like China Wuyi, which is actually on the stock market. It's a listed public company, but we included it in the state-owned instead of the private. So this is important in showing that it's leaning more towards the business side instead of the aid side, because if you're a private company, first, your primary goal is profit. It's not welfare management or welfare engagement. So that's a pretty strong indicator. And then secondly, the state-owned companies were we weren't sure what to do with those. And so we investigated it further. And we found, when we asked how many of them had used concessional loans or had ever had a concessional loan as one of their projects, we found that only 15% of the companies had ever had concessional loans, which again goes back to the point that if you're going to be doing something that is in the aid-related industries, you're going to want, most likely it's going to come from a concessional loan from the China Exim Bank. To do a little robustness check on that, we also asked how many of them had ever partnered with the Kenyan government, and found that it was actually very similar. Only 17% had ever done a partnership at all with the Kenyan government, and so that again points to the fact that these companies are coming in for investing purposes. They're not coming in to work with the government, and if you're going to do any sort of aid project, you definitely need to be working with the Kenyan government at some point. And so that was pretty strong evidence for us on that end. In terms of the concessional loans, you could see that the concessional loans, this is in billions USD, the concessional loans are a pretty small percentage. If you look at the non-concessional loans and the non-concessional committed loans, those are much greater than the concessional loans put together from just the China Exim Bank in general. So even if they had been working with the China Exim Bank, they weren't necessarily always getting a concessional loan from China and from the government. Additionally, we found that the Kenyan government was only able to receive $120 million in concessional loans a year from the Chinese government, which means that really large projects were just not feasible under the concessional loan program, because $120 million won't really build you very much. And so most of these companies weren't coming in on, even if they were doing construction under aid premises, they were coming in as private companies to do business, even if they were building infrastructure. This graph is quite interesting. We were looking at what years companies were coming in and whether they were state-owned versus private companies. And you could tell, so in the 1980s, there was one company in Kenya, and it was China Road and Bridge, which is a state-owned company, and that makes sense because China was not an open economy at that time. In the 1990s, it jumped up, and 4 more entered the market. And again, Kenya doesn't have resources, so it wasn't one of the strongest markets for Chinese companies to be entering, even when they were first opening up, so keep that in mind. And that was when China first opened up in the 1990s, so it makes sense that those were all state-owned as well. In 2000, you get your first jump at a little bit of a private company entering into the market. 2001, there was a lot of market research for the Going Out program that was starting in China, where they pushed companies to go out into the world. And so there was a drop then, but it was explained by a pretty big increase in both private and state-owned companies after that. If you look at 2006, you'll see a little bit of a drop, but that was China's Year of Africa, so you see a big jump right before that as private companies were getting ready and anticipating this Year of Africa and what it could bring with the Chinese government coming in. 2008 is interesting in that there's a big drop because there was an election in Kenya that year that produced a lot of violence for the first time in Kenya's history. And so, interestingly, a lot of the Western companies exited the Kenyan market at that time. And what we see after that is a huge increase in private Chinese companies coming to fill those voids. And a lot of them said that they came in 2008 or 2009, around that time, to fill voids that the Western companies had left. And you see another big increase in the state-owned companies after that as well, once they see that the private companies are doing pretty well. And that's important when you're looking at private companies, or at whether or not they're doing business versus aid, because these companies were seeing market problems in the market that they could fill, I guess, yes, that they could fill. And so if you're just going in for aid, you're not looking at market opportunities. You're looking at how you can help someone and things like that. And these were clearly very market-oriented changes and jumps in when companies were coming in. If you look at the industry breakdown, again, if you were going to be doing aid things, particularly in a country like Kenya, you would be going into agriculture, healthcare, education, pharmaceuticals. That's where you would be spending a lot of your investment. But as you can see here, there were a few pharmaceutical companies, but not very many, and the majority were in manufacturing, assembly, automobiles, construction, hospitality, logistics, things and industries where if you're going to get engaged in those industries, you have to put in a lot of upfront investment, and you also have to rent or build a building. You have to bring in the materials for that. It's not something that's just a short-term, go in, extract some things, and move on type of industry. And so the construction, again, Kyla talked a little bit about how construction, a lot of the aid projects are infrastructure-based, so that would explain why a lot of the construction is the biggest sector. However, we found that even companies that, I don't know if you can see this is a China Wuyi site. And China Wuyi did come in initially for on a government concessional loan, and they do a lot of projects in conjunction with the World Bank, creating roads and things like that. But they also build nice 3- and 4-bedroom skyrises that are not those are not going to be where the people who live in the Kibera slums move into right after, as part of a social welfare program. And so some of the companies who are doing things that are, for welfare improving measures are also participating very heavily in the private sector and the private business market. I think the most telling thing that we found was when we asked people what their reason for entering the Kenyan market was. Above and beyond, it was private investment and then trade. And I think that tells about more than anything that these companies were coming in and they weren't going there for aid reasons. They were going there because they saw market opportunities, and they were going there for business. And this graph also sort of just explains most of these companies were planning on expanding. A lot of them were expanding locally when we asked them about their future plans. Some of them saw it as a regional hub for East Africa or for other parts of Africa, but actually a lot of them were really interested in local expansion, both in terms of region, opening up more stores, but also expanding into new markets and new products. So we found a lot of companies that would come in starting under construction and then saying, but we also want to open up a tourism division, or we want to go into wine making, or they were opening up a lot of different expansions. So in summary, we saw that these firms were going in. There were many private firms. Very few of them were on concessional loan. They were in a wide range of industries, and they were establishing investments when they were there. They also had, we found that private investment was the primary driver for their initial venture into Kenya, and they were diversifying their businesses. And we see this all as evidence that these businesses were there for investment and business purposes and not for aid.
So, even though this isn't aid, we still think that this is good for Kenya. We looked at a Pew Research study done in, I think, around 2010 of African attitudes. 80% of Kenyans feel positive about China's role in their country. 80%. So the Kenyans seem pretty happy with Chinese businesses operating in their country. We think that this is good for Kenya also because it's building a lot of infrastructure. Infrastructure is the #1 thing that is holding back Kenya right now. If you talk to the African Development Bank, it says that infrastructure is the main reason not to invest in Kenya. When we talked to the manufacturing companies, they said their #1 problem with getting business was because of the infrastructure. The lights won't stay on, you get a power surge, your beautiful equipment is completely ruined, you lost 2 days of work. So building of infrastructure is going to really help bring Kenya forward economically. We also think that this is creating new markets, it's generating new taxes because of these new companies. There's a lot of new tourists coming in from China, and one of Kenya's big industries is the tourism industry, the safari tourism. They get visa fees, they get import and export, and also that feeds into the infrastructure. So, to sum up, our policy implication is basically that it's not aid, it's business. Thinking about Chinese involvement in Africa as aid is not helping Africa. It's not helping the West. It's alarming people in the West. And it's making China defensive. It's a very not constructive way to think about it. It's also causing academics, like all of us, to misanalyze what is going on in Africa right now with Chinese involvement in African development. We need to analyze this as FDI, not as aid. As we've shown here, it's not aid, it's business. And what we're thinking is that post-2008, the Asian economies are really strong economies in the world right now. And as you saw, post-2008, a lot of Chinese saw market opportunities in Kenya for investing in Africa. So we think that other Asian governments, like the Chinese government, should encourage their companies to go into Africa and to do foreign direct investment there. We think it's a good opportunity for Asia, we think it's a good opportunity for Africa, and we think it's working in Kenya. Thank you very much.
Thank you very much for this outstanding presentation. I believe it's also the only presentation here at the GPPN where actually original research is presented. Very, very interesting. Thanks. This was slightly longer than 15 minutes. Hence we don't have that much time for questions, but maybe we just collect all questions and then you try to answer as many as you can. Please.
So, thanks for the presentation. Very interesting, but I didn't get one part of your argument when you were talking about the concessional loans. As far as I understand, concessional loans, for example, from the European Investment Bank, it's not exactly always about giving those loans to companies, for example, if we talk about the EIB coming from Europe, but to the companies in place in the country. So you showed this graph where you showed that only 14% of, was a pie graph, only 14% of the companies you talked to, or 15% of those Chinese companies would make use of the concessional loans, and I would say that's pretty normal with concessional loans, but correct me if I'm wrong. So if you look at the Chinese companies, and if you look at the German or British companies in Africa, you would maybe get the same picture, and because it's business that what they do. So that, like, and maybe you can clarify this because I did get this argument.
Next question.
I just interested in, when you're talking to Chinese companies in Kenya, did you find any information about the profitability of any of these investments, which could probably give you an idea of the real motives for investing so much money? And I mean, the real question is, all the other countries you talked about, US, UK, Germany, other countries, they've been present in Africa much longer than China has. Why do you think China has uniquely understood the business opportunity in Africa?
I guess you were saying that, well, I might have missed it, but one of the chief reasons you were saying this is good for Kenya was that Kenyans view this positively. And I guess you cited taxes, tourism, but did you have any draft statistics that were saying this is the impact of these countries that you could, I guess, quantify and say as opposed to, I guess, conventional?
Alex, you said that not even the embassy knew how many companies there were. So did you find no indication of an overall investment strategy by the government or anything like that?
Shortly, twofold. Is there any sense of the share of the economy that is now being contributed to by Chinese companies? And while this is good in the short run for providing investment, are there any long run implications for Chinese owning most of the business in Kenya? And are they redistributing in terms of trading and training and capacity building? If you could.
Maybe just dominated by Western media. Accessories and biases, but I've read a lot about poor quality of infrastructure in Africa and we address that.
Next question.
Question pertains to infrastructure because in the last few slides you mentioned about as an investment being beneficial because of infrastructure, but can you elaborate more on what kind of infrastructure is happening?
What was the question exactly? Can you-
What infrastructure?
What
is it?
infrastructure?
Yeah, because
Lots of questions. Maybe
Do we
try
have
to
time for
give a
answers, Julia?
comprehensive answer in 5 minutes.
Concessional loans. Concessional loans are just one of the main ways that the Chinese government gives aid. So our point is that, the point we're trying to make is that the Chinese government they're not going in there for aid purposes, they are going in there for business purposes. The companies are going in there for business purposes. The Chinese concessional loans only go to Chinese companies. The way it works is the Chinese government gives the Kenyan government a loan, but the Kenyan government never sees any of that money because they have to hire a Chinese construction company to build the thing that the loan is for. And as part of that project, part of the stipulations is that they have to have a certain percentage of the machinery that comes from China, a certain number of the workers, and a certain number of the materials that are used to build the project have to come from China as well. So generally, in terms of like actual cash in hand, it goes straight to the Chinese company, if that makes sense. I'm not sure if that completely answers your
So this
question.
is Kenyanese companies and not Chinese?
No, these are Chinese companies only. We didn't talk to Kenyan companies, only Chinese companies. We didn't talk to German companies either, just Chinese companies.
In terms of like profitability and the share of the economy that's being done by the Chinese, we did look at profitability. What we found is that most of the companies actually are profitable. We didn't get a lot of detail. There were only maybe a third to a half of the companies that gave us like annual turnover numbers per year and things like that, and profit numbers. And so because a lot of them are the state-run ones particularly, were not super keen on giving up information. And we did take that into account when we were thinking about things, particularly because if you're a state-run company, you don't necessarily need to run at a profit because you're getting reimbursed by the state to continue running. However, most of the companies in Kenya, even if they were partially owned by the Chinese government in some way, are private enterprises in Kenya. And so they are paying taxes in Kenya, and they are contributing to the economy there. In terms of the share of the economy, there isn't that much data out there right now, so it's a little bit hard to say. One thing that we did notice is that the main people they're pushing out are actually the Indians. They're not pushing out Kenyan firms. They're mostly pushing out Indian firms. Some of them are native Indian Kenyans, and some of them are foreign Indian investors. But a lot of the markets that they're actually going into are markets that weren't even there to begin with. And so I think it is a concern that the Kenyan government will need to deal with and need to figure out in terms of, and they're passing some laws more recently about immigrants and how many people, how old you can be in order to